Now, it's no secret that one of the financial strategies the rich all have in common is that they all own real estate. And why wouldn't they? Real estate offers benefits like cash flow, long-term equity building, protection against inflation, and numerous tax benefits. In fact, it's been that way for hundreds of years. But for many reasons, right now, the rich are more interested in real estate than ever before. Yes, ever before. And while I not only saw this coming, but I myself have been gearing up to buy more real estate than I've ever bought for the last 3 years. But in order to tell you why all the rich people I know in my personal context are frantically buying real estate right now, and also why they're correct in doing so, and why I believe you should be too, I need to take you back to 2021. Now, I'm sure a lot of you remember what was happening during this time. We were just off of the pandemic. The interest rates were at zero, and our completely competent and honest US government at the time printed $7.4 trillion. And well, what happened as a result of that was this right here. Now, what you guys are seeing on screen right now is a chart from 2002 all the way to 2024 that shows the transaction volume in the United States apartment building market. Now, on the left, you're going to see the amount of money that was transacted based on apartment deals that happen in the United States. And on the right, you're going to see the number of properties. And as you guys can see, in 2021 and 2022, we saw record numbers. In fact, even if the chart were to extend beyond 2002 to 1990, 1980, 1970, a lot of the research that I've done will show that none of those numbers come even close to what we see in 2014, 15, 16, 17, 18, let alone 2021. And as you guys can see visually, 2021 doubles any other time before that period of time in which the amount of apartment deals were being done. So 2021 and 2022 were record-breaking numbers. And again, this is because the record low interest rates, it was dirt cheap to borrow money, and also the amount of money that was in the system. So not only for people buying real estate at the time, it was easy to borrow money, but it was also easy to raise capital from other investors for projects that were maybe too big for one individual. And to a point, I don't blame them, because what you guys see on the video now is a chart of the rent growth happening in the United States. Now, that blue line where the 9.8% hovers over is what's representing the year-over-year change in terms of the national average rent. And we could see that in Q1 and Q2 of 2022, we saw a 9.8% increase in year-over-year rent growth on average nationally. Now, what you guys won't see on the chart is the number from 2020 to 2021, which is actually 15.6%. So a lot of people bought apartments, as we saw in the previous chart, in 2021 and 2022 because we saw rents rising all the while money was dirt cheap to borrow. So of course, a lot of people did deals. But as you guys can see, starting Q3 of 2022, that starts to plummet. As we start going into 2023, 2024, you actually start seeing some quarterly changes go into the negatives, which makes total sense because as of right now in mid-2025, we're seeing states like Arizona, Texas, Florida, Tennessee, Carolinas, where on average statewide rents are actually starting to go down because they've overbuilt. Which ties into this chart as well, which shows the total amount of housing units being built in the United States. And this is considering both single families all the way to a 300-unit apartment building. And as you guys can see, in April of 2024, we had as a country 1.6 million housing units being built. But if you guys see that little bump beforehand, well, that's 2022 and 2023. And again, for the same reason, because money was really cheap and a lot of money was being printed, it incentivized a lot of people to build more housing units during that time. And the problem comes when all those units are actually completed, because you now have states like Arizona, Texas, and Florida, Carolinas, Tennessee, like we mentioned, they've overbuilt on those markets and now rents are starting to go down. But here's the biggest problem, and as to why a lot of rich people are starting to buy real estate right now. Because sure, we had a lot of buildings being built, record high numbers by the way, numbers we haven't seen since 1973. degree that's influencing the market and driving prices down. But this chart right here is what more so why the rich people are wanting to buy real estate. And what you guys see right now is the amount of loan maturities that happened in 2024 and 2025. And the reason why I say the next 18 months, the rich are scrambling to buy a lot of real estate is because, well, a lot of those loans that matured in 2024 are now hitting the market in 2025. Now, if you guys don't know what I'm talking about in regards to loan maturity, let me break it down for you a little bit. You see, back in 2021 and 2022, when rates were at zero and a lot of money was being printed, and obviously we talked earlier in this video how everybody and their mother was doing real estate deals, especially apartment buildings. Well, as a result of that, I, as a seasoned real estate entrepreneur and an 8-figure real estate investor, saw that a majority of those deals that were happening were terrible. In fact, a lot of them weren't even cash flowing, and if they did, they were relying very heavily on the market increasing the rent significantly. And well, a lot of these banks understood that. And because of a low interest rate environment, they wanted a 3-year term, 4-year term, 5-year term, meaning in those 2, 3, 4, 5 years, the buyers would actually have to refinance and renegotiate the terms of their loan based on what the interest rate was going to be 2, 3, 4, 5 years later, which is today, where interest rates for commercial properties have nearly doubled. And again, based on what I was seeing, not only did these deals not pencil out from a number standpoint, but a lot of these buyers were just overpaying for buildings, hoping that they would appreciate and things would get better and work in their favor, which, like in 2005, 6, and 7, they did not. In fact, let's use a practical example with a 10-unit apartment building and look at the numbers in terms of what happened in 2022 versus today. So let's say this 10-unit apartment building we bought for $800,000, which is actually a pretty good deal. The down payment was 25%, which is $200,000. The interest rate was 4%, and the amortization was 30 years, even though it was closer to 25. I'm just giving this scenario the best case situation to be conservative on this example. And the yearly cash flow is going to come out to be $25,626.12, bought in 2022 with the bank, like 99% of banks did in 2022 and 2021, issued a 3-year balloon. And well, if we look at that number today with the new interest rate today of 7%, well, the yearly mortgage changes to $47,901.72, meaning that $14,000 worth of cash flow is gone just like that. And as we saw earlier with this chart, not a whole lot of rent growth came post Q3 of 2022. And this all ultimately leads to why the rich, and including myself, are scrambling to buy real estate. Because now all these deals that aren't working out today that people bought 2, 3, 4 years ago, well, now they're getting calls from the bank saying, hey, you're not able to service your debt payment, we need to figure something out. And as a result of that, because of the record, by far record amount of loans maturing this year and last year, well, that's going to equate to a lot of distressed sellers. And well, if there's one thing that the rich do really, really well, is go after assets during a distressed time. We saw it happen in 2008, 2009, because all the rich people today bought a ton of single-family homes for dirt cheap during that time. And well, the same thing is happening with multifamily and apartment buildings today in 2025. In fact, to give you an example, I submitted about 6 offers on apartment buildings over the last 3 weeks, and every single one of those 6 sellers were actually in great distress, as in all their brokers and they themselves told me over the phone, hey, we're just looking to not lose money on this deal, but we need to sell it because we went way over our skis with our financing. And actually, as an example, I'm currently working on a 54-unit apartment acquisition right now where we're about to have under contract, where the seller actually bought it 2, 3 years ago, and his cost of operating the building, everything from taxes, insurance, utilities, maintenance, repairs, plus his debt service, which is his mortgage payment, is actually more than what he's actually receiving from rent every single month. And he's at a point where he just simply doesn't want to operate and manage it anymore because it's costing him money every single month, let alone the headaches, the time, and all the stress that comes with it. Now, all that said, guys, if you want to check out another video where I break down a real estate deal where I cash flow about $30,000 a year, feel free to check out this video, which is the real estate secrets the rich don't want you to know. Outside of that, guys, hope you enjoyed this content, and I'll see you in the next one.